Today, we're exploring Palantir, a company that's not just riding the AI wave but doing it with style. Unlike many AI companies that seem to be burning through cash like a kid in a candy store, Palantir is delivering strong revenue growth and even generating positive cash flow. And get this, it's growing faster than the global AI software market growth expectation for the next decade. In fact, while the market for generative AI software is forecasted to compound at about 31% per year through 2035, Palantir's revenue is surging at a robust 36%, with its customer growth coming in at a whopping 43%. Strong revenue growth and positive cash flow, a rare breed. Imagine you're at a party, and while everyone else is splurging on expensive things that leave them broke the next day, there's one guest who's efficiently managing their budget, enjoying steady returns, and even saving money for a rainy day. That guest is Palantir in the world of AI companies. Many AI companies these days are known for burning cash as they sprint to capture market share. Think of them as marathon runners who run so fast that they eventually run out of gas. In contrast, Palantir is the savvy sprinter who not only finishes the race but also pockets some cash for a post-race treat. This financial discipline comes from a laser-sharp focus on generating revenue and positive cash flow. Rather than relying on endless rounds of funding to fuel growth, Palantir's business model is built on delivering consistent, measurable results. This smart approach has a couple of major advantages. For one, it builds credibility with investors who can see actual profit emerging from its operations. Secondly, by not being overly reliant on external funding, the company can reinvest in its technology and expand its offerings at a pace that's both aggressive and sustainable. It's like having your cake and eating it too, only in Palantir's case, they're baking the cake with a recipe that even the most cautious investors find irresistible. Outpacing the global AI software market. Now, let's put Palantir's growth in context. The global AI software market is predicted to have a compound annual growth rate, CAGR, of roughly 31% through 2035, an impressive projection, no doubt. But guess what? Palantir isn't just keeping pace, it's growing at a 36% revenue rate, well ahead of that curve. And if that wasn't enough, its customer base is expanding at an eye-popping 43%. Think of it like a rocket launch. While many rockets in the AI sector are taking off with a steady liftoff of 31%, Palantir's rocket boosters are firing at 36% for revenue and even more for attracting new customers. This extra boost means that Palantir is quickly gaining ground, capturing a larger slice of the future market pie while others may struggle with cash burn and slower growth. The higher-than-expected growth also signals confidence from its customers and partners. These aren't just random signups, but a clear trend of adoption driven by the company's solid offerings and operational excellence. It's the equivalent of a restaurant that, while other eateries serve up free samples only to lose money, manages to charge a premium because everyone just can't get enough of its secret sauce. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. If you are interested in stock news updates that might be relevant to your financial targets, join us and become a member for member-only videos. Find the link in the description section below. Before we get too carried away with numbers, let's take a moment to understand generative AI and why it's being hailed as the next big thing for companies. In simple terms, generative AI refers to algorithms that can create new content, whether that's text, images, audio, or even code, by learning from existing data. Unlike traditional AI systems that merely classify or predict, generative AI can produce original output that mimics human creativity. Think of it as an artist or writer powered by machine learning algorithms. Imagine a world where your computer can compose your favorite tunes, write compelling articles, and design innovative products, all on its own. That's the promise of generative AI. It's like having a creative genius in your pocket, ready to brainstorm new ideas, solve problems, and even entertain you possibly. Yes, even AI needs to be funny sometimes. For companies, generative AI represents a powerful tool. It has the potential to automate and enhance various creative processes, drive efficiencies, and unlock entirely new markets. From personalized marketing content to automated design processes and customer support, the possibilities are as boundless as they are exciting. And while many players in the market are still in the burn cash phase trying to prove that they can do it all, Palantir is already showing that it can lead this revolution sustainably. Revenue and RPO growth, the magic numbers. Let's drill down into some of the key metrics that highlight Palantir's performance. The company's revenue growth has been stellar, clocking in at 36% year-over-year. That means if Palantir earned $100 million in revenue last year, it's on track for $136 million this year. Over time, that compounding effect becomes nothing short of explosive. But that's not all. Palantir's performance is even more impressive when we look at its RPO, or remaining performance obligations. In plain English, RPO represents the value of contracted work that the company has yet to deliver on. Think of it like a bank of orders that are guaranteed to bring in revenue in the future. An improvement in RPO is a strong indicator of future stability and growth because it shows that not only are customers buying in now, but they're committed for the long haul. In many ways, revenue growth is the on-stage performance, while RPO is like the backstage pass ensuring the show goes on. When both numbers are strong, it tells the story of a company that isn't just experiencing a fleeting moment of success but is building a sustainable, long-term growth engine. A closer look at the numbers. Now, let's get a little playful with some math. We're going to calculate a 10-year price target for Palantir, starting from its current share price of $88.55. We'll use two key growth figures, a revenue growth rate of 36% per year. A customer growth rate of 43%. Here's one way to think about it, revenue growth component. If Palantir grows its revenue at 36% per year for 10 years, the overall revenue multiplier is around 21.8. This means that, all else being equal, the company's revenue would multiply roughly 21.8 times in 10 years. Customer growth component. Similarly, if its customer base grows at 43% per year assuming, the multiplier is approximately 35.5. Now, one might think to multiply these together, but hold on, that would assume these factors are entirely independent and multiplicative, which isn't always the case in real life. Instead, we can think of the customer growth as an accelerator on the revenue growth. While the revenue growth of 36% is already stellar, the extra customer traction might add an extra boost, let's say an effective additional multiplier of about 1.97 over 10 years. This is a simplified assumption reflecting roughly a 7% incremental boost per year when comparing 43% to 36%. Combined effect and price target. By combining these ideas, we can estimate a target. First, using revenue growth alone to around $1,930. Now, if we factor in that extra boost from customer growth, about a 2x multiplier on that effect, the target might be around $3,860. In other words, if Palantir continues its impressive growth trajectory over the next decade, and if its revenue and customer growth translate proportionally into its valuation, you might see a price target in the ballpark of $3,800 per share. Of course, this is a back-of-the-envelope calculation meant for illustrative purposes. It assumes that current multiples remain constant and that growth materializes smoothly. In reality, markets can be much more unpredictable. But it does highlight the tremendous potential when you combine such high growth rates. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in more relevant stock news updates, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.